What is up, y'all? It is your boy AB, and thank you for checking out another one of my trading videos. I really do appreciate y'all. And so, what I want to talk about today is a topic that I really feel like a lot of traders, just in general, not even traders that are like are really good traders, but a lot of traders who are coming up or anything like that. I'm talking about a lot of traders in general don't talk about this topic enough, or they don't go into it into further details. Like, yeah, they might be talking about it, but they don't talk about it enough, or they don't go into further details into it. And that is, as you can see from the title, risk management. How much risk you're putting per trade that you're getting into. How much risk that you're putting your account on when you're getting into these trades. How much are you willing to lose per trade that you're getting into and stuff like that. And like I said, I feel like this is a topic that not a lot of traders talk about, and this is something that me and my boy Peyton, we've been really talking and like getting deep into it. But so yeah, so like I said, I'm gonna go and delve deeper into this and explain what I'm talking about when I'm talking about what's your risk management like, or how much risk you're putting per trade. And I'm gonna show you guys all in on my computer. So without further ado, let's get to it.
Whoa, 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 whoa. Before we even get started, I need y'all to go and hit that like and subscribe button. Don't be afraid to leave a comment either. Again, go hit that like and subscribe button. Your boy appreciates it.
All right, so first of all, before I even get started with this, shout out to my boy Peyton, aka Peyton Pips. Go ahead and follow his channel. I'll go ahead and put down his Telegram username down here so you guys can follow his channel. Very good trader, very awesome trader. I think that everybody should follow him. King of price action in the making. That's what I always tell him. Like, but anyways, let's say that on average you get into 10 trades per week, right? Or 10 trades per day. Your decision. If you get into 10 trades per day, and let's say, for instance, you have a 30% um, win rate, you win 3 trades. For every 10 trades that you take, you win 3 of them and you lose 7 of them, right? If you're taking trades at a 1-to-1 risk to reward ratio, as in saying, okay, your risk, like you're risking $50 to get $50. If you trade that way and your win percentage is 30%, then you, at the end of those 10 trades that you take, you'd be down by -4% of whatever your capital is, right? You'll be -4% of whatever capital you have. Now, let's say that if you win 50% of your trades, you win 5, you lose 5. If that's the case, and you have this, and you're still going with the same strategy of a 1-to-1 risk to reward ratio, then you're most likely gonna just break even, right? So if you're trading with the 1-to-1 risk to reward ratio, then you have to have a really high win percentage in order for you to become like successful at that, right? So like, let's say that if you win 90% of your trades, like out of 10 trades that you get into, 9 of them are for sure profitable. And remember, this, you have the hysteric where it says you cannot take partial profits in order to get your full percentage gain. You can't take partial profits at all. And break, like hitting stop loss at break even, that isn't considered doesn't consider a win with using this. This is only if you let your trade run 100% like fully, right? If you win 9 out of 10, then you'll be up by 8% with a 1-to-1 risk to reward ratio. And I'll go ahead and show you what that looks like on the charts. All right, so let's say, for instance, that we're going into a sell, because let's say, for instance, that if I'm just doing like regular price action, not with arbitrage or anything like that, we have an M pattern right here, right? This is what it looks like to me. It looks like we have an M pattern. So we have price M pattern right here. You have your stop hunt to the upside, to the floor, right? Let's say that you are expecting price to respect this support right here that I have drawn up. If you are expecting price to respect the support, then that means that you are expecting EU to go bullish, which I low-key still think is going to go bullish, but that's just my opinion. USD is playing games. But anyways, what am I doing? But anyways, so if you're expecting price to go bullish, let's say that you have a trade that is a 1-to-1 risk-to-reward ratio. Your entry will be placed right here, where if you get in on this candle, and let's just say that you want to take price up to this support right here, or not support but resistance right there, right? You're risking 22.4 pips in order for you to gain 22.4 pips. And that is what we mean by the risk to reward ratio at 1-to-1, because you're risking the same amount of pips or the same amount of money for the reward of getting that same exact amount, right? So that's what a 1-to-1 risk to reward ratio looks like. As we go along, I'll be doing the same example on the same pair so that you get to see exactly what I mean by, oh, this is a 2-to-1 risk reward ratio, 3-to-1, 4-to-1, etc., right? All right, so let's just take that same exact concept that I gave y'all with the 1-to-1 risk reward ratio and put that on a 1-to-2 risk reward ratio, right? So let's say that if you win 30% of your trades, so as in like you win 3 trades, you lose 7 of them, and you were going with the risk reward average of a 1-to-2, you'd be losing 1% of your account, right? So let's say that if you have like a $5,000 account, right? 1% of that $5,000 account is $50. If you're doing a 2-to-1 risk reward ratio and you're losing 7 trades but winning 3 of them, right? Now, let's put that same concept and let's do it for 50%. If you're winning 5 trades and you're losing 5 trades, so you're basically 5 and 5, right? I mean, yeah, you're 5 out of 10. You'd be up 5% if you're doing a 2-to-1 risk to reward ratio. Again, this is not if you are taking partials. This, and especially, is not if you're just breaking even on all your trades. This is if you're letting your trade go from your entry to your take profit. Your risk to reward ratio then turns to a 2-to-1, right? I mean, yeah, your risk to reward ratio is a 1-to-2, and then if you're a 50% trader, if you're winning half of the trades that you get into, then you still could be up 5%, right? Now, if you're a really good, if you're a really like spot on trader, like arbitrage spot on, then if you're a 90% trader and you're making all your trades you get to take profit, and you win 9 out of 10 of your trades, that's a 17% increase among 10 trades on your capital. This is why I always say you want all the trades that you're getting into to be a 1-to-2 risk to reward ratio or more, right? And I'll go ahead and show you guys that on the chart right here. This is what it looks like when you have a trade that has a risk to reward ratio of 2-to-1, right? So you buy from right here, and let's say that your take profit is right here at this resistance. As you can see, there's a small resistance on the hourly time frame right there. You're risking 22 pips in order for you to get 44 pips. This is what it looks like when you have a trade that has a 1-to-2 risk to reward ratio, right? You want your trades, you want almost all your trades to look like this in order for, even if you are only a 50% trader, that you still become profitable. Even if you are a 40% trader, you will still be profitable. Even if you are a 30% trader, you would still be, you wouldn't be profitable, but you wouldn't be losing a lot. You'd be only losing 1% of your account, right? Per 10 trades. So that's for if you're looking at it from a 2-to-1 risk to reward rate. I mean, a 1-to-2 risk to reward ratio. Let's go take a look at what a 1-to-3 risk to reward ratio looks like. All right, so this is what a 3-to-1 risk to reward ratio looks like, right? And what this is gonna do to you guys is gonna be like, damn. So this is the type of trades that I'm trying to look for. So if you have 30% of your account, right? Let's say you have 30% of your account, of your trades that you take, you only win 3, you lose 7. If your risk reward ratio is 1-to-3, you'll still be a winner. You'll still be having a 2% increase on your account. I'll say that again. So you know how they say that the way how you want to be a trader is you could lose 7 trades, win 3 trades, and still be profitable. This is what they're talking about. When you have a high enough risk to reward ratio that even if you lose 7 of your trades and you win 3 of them, you'll still be profitable. It's when you have a 1-to-3 risk to reward ratio or higher. And again, this is not that if you take partials, you can't take partials, and this definitely doesn't count if you're just letting your trade hit stop break even or taking early profits. This is if you let the trade ride from entry to exit, that you will have this percentage. If you win 50% of your trades, like you lose 50% of them, you win 50% of them. If you have a high enough risk to reward ratio of a 1-to-3, then you would be up 10%. 10% per week. 10% per week can change your life. And I'll talk about that more once I'm done showing you guys this visually. But 10% per not even 10% per week, 10% per month of your account can change your life. And you'd be surprised at how that could change your life. Anyways, so let's say now if you're a really good trader and you're winning 90% of these trades, like 9 out of 10 trades that you get into, they hit your take profit every single time. That's a 26% risk to reward ratio. That's a 26% gain of your account. I'm sorry, I was thinking about something else at that time. But that's a 26% gain of your account. That's crazy. That's crazy. If you're taking 10 trades, win 9 out of 10 of them, and your risk reward is 3-to-1, that's a 26% gain for your account. And there's some people, they take 10 trades per day. There's some people who take 10 trades per week. There's some people who take 10 trades per month. It all depends on what your trading style is. And so I'll show you guys what this looks like on a regular chart. All right, so this is what it looks like when you have a risk-reward ratio of 1-to-3, right? So what you're doing is you are risking 22 pips in order for you to 22.4 pips in order for you to get 67.3 pips. This is what it looks like for you to get a risk-to-reward ratio of 1-to-3. These are the type of trades that I'm trying to be on. These are the type of trades that I like to be on, and sometimes the problem is that when we get into these trades like this, we sometimes like, okay, I want to take my profits right here because what happens if price stops at this resistance right here, then goes back to my entry. And that's why I said that this is only if you don't take profits or partial profits away from the trade. Now, obviously, if you're trading in the market, you always want to win in the market, right? You always want to be like, oh, well, I took my profits off the table and my stop loss is at break even. So no matter what happens in the market, I make money, which is a very smart idea. And it's a very wise idea. But the only problem with that is that you just mess up what your win percentage, I mean, not your win percentage, but you mess up the total growth of your account based off of if you're going just based off of pure numbers, right? But there's nothing wrong with putting your stop loss at break even and taking partial profits, like let's say around right here. There's nothing wrong with that at all. So now let's go on to 4-to-1 risk to reward ratio. So not 4-to-1, sorry, I meant 1-to-4 risk to reward ratio, but this is what a 1-to-4 risk to reward ratio looks like. So even if you're winning 30% of your trades, you still are 5% high up there. And even if, like, let's say for instance that you're going into a trade that's for 50%, I mean you are trading at a 50% level, like you win 5, you lose 5, you'll still be up 15% if you let your trades run all the way with the 4-to-1 risk reward ratio. And lastly, 90%, 35% increase in your account. Now, this is if you're trading with a 1-to-4 risk reward ratio, which a lot of traders do not have that patience or that mental fortitude to hold a trade that long with the 1-to-4 risk reward ratio without taking any partial profits. There are a lot of professional traders who could trade that way because, like I said, their mental fortitude is strong and they can hold trades for that long. But let me go ahead and show on the chart. There's people, they can't even hold a trade up to right here without taking partial profits or without getting worried about it. Sometimes I'm just like that. There are other times where I don't even give a fuck what price is doing. Even if, like, let's say for instance I have like an 80 pip stop loss, there are times that I don't even care. I'm like, it's at, like, let's say it's at negative 70 pips and I'm just chilling. I'm like, all right, it's whatever. And that's because of my risk management is on point. But let's see what a 4-to-1 risk reward ratio looks like. All right, you guys get the point. It's like off by 0.01, but who cares? But you're basically risking 22 pips in order for you to get like 90, 91 pips. There are, like I said, there are some people, they don't have that mental fortitude to be able to hold a trade for that long. But patience pays the bills. Patience always pays the bills. Like, if you couldn't be able to hold a trade for that long and you have a 4-to-1 risk reward, I mean a 1-to-4 risk reward ratio, then like I said, you don't even need to be a super profitable trader. All you need to do is be able to realistically win only 3 of your trades. Just keep doing that 10 times and you'll still come out profitable. And a decent profitable, because 5% per week, because let's just say you take 10 trades and 5% per week, that is lovely. That is money. Yeah, I think I stopped that. So like I said, all you really need to do is be a 30% trader to be successful. To be a successful trader, all you need to be able to do is really win 30% of your trades, and each one of those trades have a 1-to-4 risk to reward ratio for you to be a successful trader. Because 5% per week, let alone 5% per day or some stuff like that, is really good for a trading account. Now, last but not least, 1-to-5 risk to reward ratio. This is straight fuego. 30%. If you're a 30% trader, you win 3 out of 10. You still gain 8%. 50% trader, you still gain 20%. 90% trader, you still gain 44% at a 1-to-5 risk to reward ratio. Now, take a look at how that looks on the chart. That's what it looks like. So this is what a 5-to-1 trade ratio looks like on intraday charts, like the 1-hour chart. So you're risking 22 pips in order for you to get 112 pips. This is actually a trade setup that I'm looking for right this moment. I'm hoping that this support gets respected so that I could buy EU. This is a trade that I'm looking at for right now. But let's see how that goes. But you guys see what I'm saying though? I'm risking, like, let's say that for instance, this whole trade that I'm risking $22 to make $112. Let's just say for instance, I'm using a 0.10 lot size. I'm risking $22 to get $112. That's what risk to reward, right? That's like the fire of risk to reward ratio. Now, I'm going to explain about how to manage your risk for trades. Yeah. So what we have here is 2% of $10,000 is $200, right? 2% of $10,000 is $2,000. 2% of $1 million is $20,000. Okay. If you are risking per one trade 2% of your account, that is pretty decent. You're doing a pretty good job. If you risk, that's like the most that you want to risk of your account, right? But let's just say now, for instance, that we go on a 10-day losing streak. If we go on a 10 trade losing streak, that you lose 10 trades in a row and you're risking 2% per one of those trades. If you do that with what we have here, you lost 10 trades and each trade is at 2%. What does that equal? You just lost 20% of your account. If you go on a losing streak and you lose 10 trades, at all of those trades, you're risking 2%, you lost 20% of your account. And what is 20% of $10,000? $2,000. So you just lost 2,000 out of 10,000 of your account. Let's say now that, for instance, you lose 20 trades in a row. Let's just say that it's a really tough week or a really tough day or a really tough month or whatever, and you lose 20 of your trades, right, at 2%. So 20 times 2% is equals to 40% of your account. And what's 40% of $10,000? 4,000. Usually, like that means you've lost $4,000, and that means that you now only have $6,000 left to trade, right? That, with that in mind, that still isn't bad. But do you really want to lose 40% of your account in like less than 1 week or 1 month or 1 year? That is a ridiculous amount. Because now, let's go on to the million. Let's go on to the $1 million account. So 2% of 1,000 of 1 million is $20,000, right? Let's say that you miss 10 of these trades at 2% each. That means you've lost 20% of your account. 20% of $1 million is $200,000. And I'm going to check that on my phone just in case, because I do a lot of my calculations on my phone. There is nothing wrong with that whatsoever. Times 20%. Yep. Don't know if you guys can see it, but $200,000. You just lost $200,000 off of 10 trades. 10 trades, realistically speaking, for a trader, especially if you're a day trader or an intraday trader or whatever, 10 trades is not a lot. 10 trades is literally just probably like a couple hours for some. So if you're risking 2% of your trade, if you're risking 2% per trade and you're a 30% trader, if you're a 30% trader and you lose 10 trades, then that means that you're going to be losing 7 times 2%, 14% of your account, and then you'll only have 6% left. So this is something, and obviously we don't need to deal with this 2% of $100,000. Let's say now, for instance, that we have a really risky traders and they're out there trying to risk 5% per trade. You have 10 trades and you're risking 5% per each of those trades. You just threw away half of your account. You just literally threw away half of your account. If you lose 10 trades in a row and you're risking 5% of your trade, no investor would want to work with you. Nobody would want to even try to invest with you, and no one was even like show you your credibility as a trader if you're risking 5% per trade. And if you have one bad week, almost all your money could be blown just like that. And it's crazy because this is how a lot of traders trade. They trade with 5% per trade. And I used to be in that situation. I used to trade 10% of my account. and try to get home runs and stuff like that. And it's just, that's the reality of things. A lot of traders do trade that way. And so this is something that a lot of people have to figure out. They're like, okay, how much percentage am I going to risk per trade? How much am I going to be able to want to try to make per trade? How much I'm willing to lose per trade? And how much percentage of my capital I'm going to trade? Because guess what? 2% of a $1,000 account is nothing. Like, you're going to see it as nothing. That's only $20. Do you know how many trades that I get into that I'm not worried about losing $20? I'm not even worried about losing $20 off of a $500 account. So what makes you think that if you have $1,000 in your account and you're losing 20% and you're losing 2%, that you're really gonna care like that? You're really not. So let's put this all into perspective of a trade, right? Let's just say that, for instance, let's say that I have a let's say that I have a $500 account, right? $500 account, and I'm trading 0.10s on it. If you're trading 0.10s on it, you could only lose 20 pips. Hold on. You can only lose $20. I put loss, sorry. I was like, what the heck? You can only lose $20. And do you know how much that will be? That you've already taken a hit on your account? That's a 4% hit off of you just losing $20 on a $500 account. You've already lost 4% of your account. You see how that's wild? And do you know? And guess what? You losing $20 on a 0.10, that's only 20 pips. That's only 20 pips that you're risking, and you've already on a $500 account, and the trade, and you, 4%. If you lose 4% on one single trade on a professional account, let's say, like I said, if you lose 4% on one trade off of a $1 million account, that's a lot of money. That is why I always tell people that, if you're gonna trade, I suggest that you have more than $1,000 on your own personal account, but don't even just put it there. You have to practice. Go work on a demo account. Learn how to flip your money twice on a demo account before you even deal with real money. Because if you can't do it with fake money, you can't do it with real money. And I'm gonna be real with y'all. Right now, I am. I ain't gonna talk about that. Y'all good. But yeah, if you can't double up a demo account twice, there's no way in hell you could do it on a real account, because on a real account you have to put in real emotions, you have to put in real time, you have to put in real patience, and you will lose real money. So this is something that I feel like I said, I feel like a lot of people don't talk about this enough. A lot of people don't talk about risk to reward ratios. They don't talk about win percentage. They don't talk about percentage of your account size or whatever, and how much you should be risking per trade. And that's something that I really want to bring into awareness. If you have a $500 account and you're trading with, let's just say, for instance, you have a $500 account and you're trading with a 0.05 lot size. In order for you to lose $20 off of this trade, you need to lose, and you can only lose. So if you have a $500 account, you could only lose $10. You can only lose $10 in order for you to say, okay, I got to go into the next trade. Do you know how many pips this is? On a $500 account with a 0.05, this amount of pips is only 20 pips again. So you can only lose, oops, sorry guys. All right, so you can only lose $10 in order for you to lose 2% of your account on a $500 account. Who's gonna want to lose $10, or who's gonna care about losing $10 on a $500 account? Not that many people. I mean, well, let me say that. Let me rephrase that. Not that many professional traders, because I don't. Even losing $10 on a freaking $200 account, I don't feel like that's a lot, personally. But then, if you're going off a percentage, that is a lot, because you don't want to lose 2% of your whole account off of just one trade, because you only have 98% of your account left. And then if you lose 10 trades and all in 2%, you've lost 20%. If you've lost 20 of your trades at 10%, you lose 40%. You see what I'm talking about as how it doubles up? It's just, you want to be able to put a decent amount of risk per trades. So what I suggest to everybody is that if you're the type of person that gets into a lot of trades at a time, risk 0.05% of your account. Risk 0.05% of your account, and you could trade as many trades as you want to, because in order for you to lose 2% of your account, you have to lose 4 trades. You have to lose 4 trades at a point. If you're risking 0.05% of your account, you have to lose 4 trades in order for you to lose 2% of your account. In order for you to lose 5% of your account, you need to lose 10 trades. Yeah, sorry, I had to think about it for a second. You have to lose 10 trades in order for you to lose 5% of your account. If each trade you're risking 0.05%, you're risking 0.05% of your account. So let's see what 0.05% of $1 million is, right? So I'm going to use this right here. So $1 million 0.05% of $1 million is equal to.
When I make my music, you know what I'm saying, I want people to feel what I feel. I want them to feel that energy that I.
Let me change the song, though.
Yeah, that's all it is. Because I make it straight from the heart. So it's like, to be taken for anything else is great.
All right, so all right, so 0.05% of $1 million is $5,000, right? So it's $5,000. So in order for you to lose 2% of this $1 million, you have to lose 4 trades at 0.05% on each trade to lose 2% of initial account size. And then what have we already established what 2% of $1 million account is? $20,000. So you see what I mean? This is just giving you longevity on how you could enter into these markets. Because we have to, like, a lot of traders have to realize losing trades in the market is not a bad thing. It's not bad to lose in the market. You have to lose. If you're winning all your trades, you get cocky. You get a big head. You're like, oh, I'm unstoppable out here. There's no way I can lose. And it gets to a point like that. Even if it takes a day, if it takes a week, if it takes a month, if it takes a year, it gets to a certain point where there are people who are like that. They're like, oh, well, I'm cocky. I'm that guy, or I'm that girl. I don't lose trades out here. There are people like that. I see a lot of people like that. I just look at them and I shake my head, because that's not what real traders are. Real traders know that each and every single trade that you get into, you could potentially lose it. And so this is why I felt like there was a need for this video to come out, because a lot of people don't even understand risk to reward ratio or understand percentages and all that stuff. And that's perfectly fine. What you guys can do though, and I'm gonna go ahead and connect this video, is use my FX book. They have calculators that you could determine based on how much how much your account is, what lot size you could use, and how many pips you could sacrifice in order for you to lose that certain percentage that you're looking for. And I'll go ahead and send you guys out over there.
All right, guys, so this is how you go ahead and calculate your risk to reward on a trade using the MyFX Book app, right? And so the way how you do that is you go to calculators. Obviously, you clear out any ads. So let's say for Euro USD, we want to do risk by percent. So let's say that you have a $10,000 account. And let's say if you want to risk 2% of your account, right? Stop loss in pips. Let's say that you've already had the trade set up, and the trade setup, you're risking 40 pips. So you want to risk 2%. Your stop loss is in 40 pips, and your account balance is $10,000 on a Euro USD. When you calculate, it shows you all that stuff. So so the amount that you're risking is $200, and so standard lots is 0.5. When they say your standard lots is 0.5, that means that the lot size that you would be using is a 0.5. And you see how it says mini lots, for what one mini lot is 0.5. You get me? So, I mean, not one mini lot. 5 mini lots is 0.5. When you see 50 micro lots, that means it's 0.01 times 50, which is 0.50. So that is exactly how you calculate this. Let's try it again. Let's try it like with a different amount. Let's do $100,000 with a risk of 2% and a stop loss of 40 pips. Calculate. So you see that your standard lots now, you're risking $2,000 on a $100,000 account. So now your standard lots, now you have 5 standard lots. So you could go ahead and put a 5 lot size on there for you to risk $2,000. So for your mini lots, same thing. It's showing you 50. So you're looking at what you really want to focus on is the standard lots. Because now let's say that if you want to just risk 0.5% on that one trade, right? So you're risking $500. You see what it says 1.25? This would be the number that you would put on a $100,000 account size, and that would be your stop loss, and that's how much you'd be risking. So this is how you use the MyFX Book app to use your calculators to figure out what your risk reward is. What you could also do is risk by or stop loss by price. So you're like, let's say that your entry on Euro USD is 1.08760. And then your stop loss is 1.08. Let's go ahead and go 30 pips with a stop loss. So that would be 460. That's 30 pips, right? Then you calculate it. It'll still give you the same thing. It'll show you now the loss size that you use is 1.67 basically, for you to lose $500 off of this trade right here. So hope that helps out with a lot of people. And you could, like I said, you could use risk by fixed amount or risk by percentage. You're risking, if you want to risk the certain amount of dollars right here, like let's say
okay, well, I want to lose 1.08760. This is a 30 pip stop loss. Let's just say, for instance, that, oh, what I'm risking, I want to risk, let's say, about $700, right? So calculate. That's how much you're willing to lose. Standard lots become 2.33. But I personally don't like using it this way. I'd rather use risk by percentage so that you can figure out how much percent per trade that you want to lose.
All right, guys. Well, thank you so much for checking out this video. I do appreciate it. What I appreciate even more is if you guys go ahead and drop a like, drop a comment, subscribe to my YouTube channel. Also, you guys can follow me on my social media pages. That means a lot to me. I will leave the link to my free analysis page on Telegram down under the description, and I'll also drop down Peyton. Shout out to him for those charts, because those charts are amazing. Those are fire. But shout out to him for creating that chart and showing exactly on the visual form what it looks like for those type of risk to reward arrangements and all that stuff. So again, go ahead and follow us on those. Follow my social media pages. It's all ABK25. I'm the only one and only ABK25. If somebody is out there trying to act like they're me, which I've already reported a channel like that, then just let me know and we can get them out of the waste, because I am not with the fuck shit. But anyways, y'all, I hope you guys have a good day, and let's keep making this money on these charts. Deuces.